What a crazy month it has been for investors all over the world, with CPI numbers coming down. The S&P 500 is up by over 5%, making new highs yet again. The FTSE 100 is up by nearly 2%, but then again at the end of May we see that dip. And the FTSE 250 is up by over 4%, including that dip in the end of May. So how has all this information affected my trading 212 portfolio, both my invest account and my ISA account? So let's go straight into it. So here is my trading 212 invest account portfolio, and later in this video I'm going to go through my trading 212 ISA. But currently you can see that my portfolio value is £15,362. Now if I click on this arrow here, you can see that I have currently zero free funds. This is because I am completely invested into the market. Now you can see that my trading 212 calculated return is at 0%, and my return they calculated is only 33 pence. Now, like I always say, the trading 212 calculated returns are very weird and they're not really representative of what I get. So I'm going to show you all my holdings in this video. Now, if you do want to sign up to trading 212 and receive a free share while you do that, use my link in the description. And when you sign up and top up your account with just £1, you will receive a free share. Alternatively, if you've signed up recently and haven't received a free share, use my promo code JUBAIR and you should receive a free share. Now, the first thing that I want to show you is my history. As you can see, just yesterday I put in £500 and then I bought £500 worth in the S&P 500, which I'll show you later on. I do always want to show you my total realized profit and loss. Last month, this was £2,373. This month, it's £2,617. So that is a profit this month of £244, which is around a 1.5% profit. Now, if I could get this every single month, that will be around 19 to 20% per year just in pure profit, which will be really good. However, the stock market doesn't always work like that, and some months there's going to be more, and like last month, some months it's going to be less. You can see how my portfolio has changed over the past month. At the beginning of the last month, it was around £14,000 and my return was plus 53, trading 212 calculated anyway. You can see that at one point my return was as high as £250, and then of course we have seen dips in the S&P 500, and then I topped up my account, and then we've seen more dips in the S&P 500. So my first holding is in Walt Disney, and I have 0.12 shares in them. Now, over the past month, Disney has gone down by 5.89%, which isn't looking too good at all. So in my portfolio overall, Disney is still up by 13.1%, so that is a £1.21 gain. You can see that they currently pay a small dividend yield of 0.74%, and here from their financials, we can see that their revenue has been going up since 2021. However, net income doesn't seem to be increasing. From their balance sheets, you can see their total number of assets, at least on paper, exceeds the amount of liabilities they have. And from a cash flow perspective, you can see 2023 was really good in terms of operating income, and also the cost of investing and financing seems to have gone down. However, 2024 figures are still up in the air. Remember, these figures that I go through are just at a glance to quickly see or gauge the direction of a company. If you do want to pick your individual stocks, remember this is not financial advice. I would suggest looking at alternative, more detailed information, as trading 212 is just a glance. Now next I have 35 shares in Vodafone. You can see that over the past month, Vodafone is up by 12.06%, which is actually really good. In my portfolio overall, however, Vodafone is still down by 17.06%, and that is a loss of only £5.46. You can see that currently the dividend yield, at least on trading 212, says 10.25%. However, this might be the last dividend, and I believe they are cutting dividends, although if you want to find out more about individual companies, you can do that on your own time. Let's quickly look at the financials. We can see that revenue is still high, but going down since 2021. Net income has gone down from 2023 too. However, we're still in 2024, not even halfway through yet, so things could change, I guess. From a balance sheet perspective, we can see the total number of assets higher than liabilities, but then again, you do have to go in and do your own due diligence to see what kind of assets and liabilities they are stating, because they could literally put anything. And in terms of cash flow, we can see operating income is really high, but the cost of financing is also really high. So next I have 0.9 shares in the Vanguard Germany All Cap. You can see over the past month it had a really good run until about 15th of May, and then it has been on a decline. But overall in the past month, up by 2.89%, which isn't too bad for an index. In my portfolio overall, it is up by 6.3%, so that is a £1.30 gain. Next, I have the infamous Tesla, and I have 0.17 shares in them. Over the past month, you can see Tesla is a highly volatile company, and over the past month, they are down by 1.37%. In my portfolio overall, they are down too by 17.39%, and that is a loss of £5.04. You can see that Tesla doesn't currently pay a dividend yield. And from their income statements, you can see that revenue has increased greatly since 2022. And from a balance sheet perspective, you can also see that total number of assets has also greatly increased. And here we can see from the cash flow, operating has decreased and the cost of investing has also increased. So next I have 33 shares in Rolls-Royce. You can see that over the past month, they are up by 11.26%, which is really good to see. In my portfolio overall, they are up by a magnificent 177%. So that is a gain of £97.32. You can see that they currently don't pay a dividend, and here from the income statement you can see revenue is going up, so is net income. And from a balance sheet perspective, you can see the total number of liabilities is actually higher than assets. This isn't always a bad thing, however, and from cash flow we can see that the operating income is going up and the cost of investing and financing is much less since 2022. Next, I have 2.13 shares in PayPal. Now, over the past month, PayPal has gone down by 4.72%. You can see that at one point it was below my average buying price of $61.07, and now currently it sits at $63.02. However, in my portfolio overall, I am still up by 1.47%, and that is a gain of £1.53. Now, PayPal doesn't currently pay a dividend yield, and you can see from the income statement, revenue has been going up, and so has net income apparently. And from a balance sheet perspective, you can see that the total number of assets is higher than liabilities. And from a cash flow perspective, we can see that the operating income is reducing year on year. So next I have 2.32 shares in Orange. Now, over the past month, Orange is up by 2.88%, which is not too bad. In my portfolio overall, however, they are down by 4.83%. And that is a loss of £1.08. Now you can see they pay a good dividend yield of 6.76%. And from their income statement, you can see that their revenue is still high. Net income is quite low in comparison. So from the balance sheets, you can see assets, at least on paper, is exceeding liabilities. And from a cash flow perspective, you can see operating income looks decent and the cost of investing and financing doesn't look like it's too much. Now next I have the fantastic Nvidia, 0.09 shares in them. And what can I say about Nvidia? Their share price has exceeded $1,000 a pop. That's absolutely mental. In the past month alone, they are up by 32%. Now, this is a company that everyone wishes, they could have invested in, especially back here in 2021. If you had invested in it, you would basically be up 9 to 10%. Imagine putting £100,000 there. You would literally be a millionaire now. You can see that my average buying price was $293, so obviously I'm going to be up by a lot. So in my portfolio overall, I am up by 268%, which is actually mad to think about, and that is a return of only £57.18. Wish I had bought more Nvidia. Now, their dividend yield currently says 0%, but I believe it is slightly above 0 and it's getting rounded down unless they have cut dividends. Someone let me know in the comments down below. In any case, the reason why the share price is so good is because their revenue is also incredibly good. You can see it's gone up pretty much exponentially since 2021. You can see that net income has exploded. Revenue is around £60 billion a year. Now, from a balance sheet perspective, you can see things are looking even better, if you can say that. Total number of assets greatly exceeds the liabilities. And from a cash flow perspective, you can see that the operating income is incredibly good. Now, next I have 0.4 shares in Nike. Now, over the past month, Nike hasn't been doing too bad, up by 5.32%. Now, in my portfolio overall, however, they are still down by 8.43%, and that is a loss of £2.79. You can see they currently pay a dividend yield of 1.58%. And from the income statements, you can see revenue and income look pretty good. From a balance sheet perspective, you can see that the total number of assets exceeds liabilities, at least on paper. And from a cash flow perspective, we can see that the cost of financing has been creeping up every single year, so they could be in trouble for that. So next I have 0.49 shares in National Grid. You can see that over the past month, things are not looking good at all for this company. They are down by 16.36%. Yikes. So this puts me below my average buying price of 1000 pence. And in my portfolio overall, I am down by 12.1%. However, that is only a loss of 60 pence. So I am not too bothered about that. They currently pay a really good dividend yield of 6.76%. And here might be the problem from the income statement. You can see that net income is greatly down from 2023, although revenue seems to be still quite high. From a balance sheet perspective, we can see assets, at least on paper, exceeds liabilities. And from a cash flow perspective, we can see that operating income, although high, the cost of investing is also quite high too. Next, we have a Magnificent 7 stock, Microsoft, and I have a measly 0.07 shares in them. Over the past month, you can see, just like the S&P 500, up, 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 and then towards the end of May, I don't know what happened, you can let me know, but it doesn't look good towards the end of May. However, overall in past month, up by 5.12%, which I can't complain about. You can see that overall in my portfolio, they are up by 5.64%, and that is a gain of £1 and 28 pence. They pay a really small dividend yield of 0.72%, and as you can see from the income statement, just as every other Magnificent 7 has been doing really well, their revenue has been going up year on year. Balance sheets also look good, a lot more assets than liabilities, at least on paper anyway. And from a cash flow perspective, you can see that operating income does seem to be covering the cost of financing and investing. Now next I have 0.38 shares in Mercedes-Benz. Over the past month, not looking good, down by 6.4%. In my portfolio overall, however, they are still up by 5.64%, and that is a gain of £1 and 17 pence. Now they pay a really good dividend yield of 7.98%, and from the income statement you can see that revenue is looking high, net income seems to be decreasing year on year, and from a balance sheet perspective, everything seems to look all good and well, and from a cash flow perspective, you can see that operating income has been decreasing year on year. Now next I have 343.7 shares in the Lloyds banking group. Now over the past month, doing really well, up by 17.2%, which is really nice to see. In my portfolio overall, they are up by 25.1%. That is a gain of £38 and 28 pence, which is really nice. They pay a nice dividend yield of 4.97%. And here, everything's not complete, so I'm just going to quickly glance through it. Balance sheets, number of assets, just barely passing number of liabilities, which seems normal for a financial company. And from a cash flow perspective, you can see since 2022, they are not bringing in as much money as they used to. Now next is my biggest holding by far, and this is 1,583 shares in the iShares Core S&P 500. Now this is the GSPX, and as you can see, this month has been incredibly volatile. I bought a bunch right at the top, and then of course after that it did dip, but that's fine for me, especially in my invest account. I don't really worry about these fluctuations, as it's inevitably going to go back up one point, and if not, I can just keep pumping in money to reduce my average buying price, and that's exactly what I've done. As you can see, overall currently I am down by 1.82%, and that is a loss of £258, which is pretty dear, but like I said, in the short term, not really worried. Even if this goes down by 50%, I have a great opportunity then to, whatever I put into it, to just increase my money by a certain percentage when it goes back up. Past performance not being a true indicator for any future performance, of course, even with an index like the S&P 500. You can see here that the dividend yield is currently 1.16%, and remember, this is the GSPX, so it has an expense ratio of around 0.1%, which is higher than something like the VUSA, but this is a hedged ETF, and as you guys may know, over the past month the S&P 500 may have gone up, but the pound has also gone stronger, meaning your returns for the VUSA aren't as high as something like the GSPX, which we can see over the past month is up by 3.86%, and we can see at the end of May things have not gone too well, and that is included in the 3.86% growth that we've seen. Now if we go into the history, you can see that yesterday I bought 56.63 shares here, and I bought this at £8.82, which I still think is really high, but I don't really care too much about looking at the price, just buying for now. As you can see, I bought and sold this a lot, and this is where my profits are being made, and you could do this if you want to. I don't recommend this because of course all of this money is outside my ISA, so really all I'm doing is waiting to actually fill £20,000 into my invest account so that I can transfer it next April. I still have around 10 to 11 months for that, so there's no really rush there. So next I have 6.2 shares in what is basically Royal Mail. Over the past month, they have been doing incredibly well, up by 23.6%. So almost even close to Nvidia here. In my portfolio overall, this is up by 58.1%, and that is a gain of £7.71. Now they pay a very small dividend yield. I believe this has been cut at some point, of only 0.6%. And you can see revenue is incredibly high, but net income nowhere to be seen in 2024. But even then, 2023 figures were lower than 2022 for net income. Now from the balance sheet perspective, you can see somewhat assets may have been sold off in 2023, but they're still higher than the number of liabilities. And from a cash flow perspective, you can see operating income is not looking good. So next I have 23.1 shares in International Consolidated, basically IAG, and over the past month down by 0.95%, which is not too bad. In my portfolio overall, they are up by 13.07%, and that is a gain of £4.59. Now they don't currently pay a dividend, but you can see the revenue has been going up very much so has net income. From a balance sheet perspective, you can see assets and liabilities are almost neck and neck, but this could be expected for an airlines company. And from a cash flow perspective, we can see that the operating income is quite high, but lower than 2022, and the cost of financing has increased. So next I have 3.16 shares in H&M, and as you can see over the past month, they have been doing really well, up by 6.46%. In my portfolio overall, they are up by 26.91%, and that is a gain of £9.28. They pay a decent dividend yield of 3.52%, and as you can see from their income statement, revenue has been going up, so has net income. From a balance sheet perspective, you can see total number of assets exceeding number of liabilities, and from a cash flow perspective, we can see that operating hasn't been the same since 2021. Next I have 0.29 shares in GSK. Over the past month, again not too bad, up by 3.61%. In my portfolio overall, they are up by 33%. That is a gain of only £1.31. And now they pay a decent dividend yield again at 3.41%. And you can see revenue has been increasing. Net income is greatly down from 2022. Balance sheets, total number of assets, very close to number of liabilities. And from a cash flow perspective, we can see operating income has been decreasing year on year. So next I have Direct Line Insurance, and I have 2 shares in them. Over the past month, doing really well, up by 17.16%. And as you can see, some point mid-May, they have surpassed my average buy-in price. In my portfolio overall then, I am up by 8%. That is a gain of 32p. Now they have a small dividend yield of 1.96%. And again, financials is not complete. Here you can see balance sheets look fine. And from a cash flow perspective, you can see that operating income is down from 2022. Now next I have Deutsche Lufthansa, 18.1 shares in them. Over the past month, not doing too well, down by 4.35%. In my portfolio overall, they are down by quite a big 25.87%, and that is a loss of £34.60, which isn't actually that small. Now they pay a good dividend yield of 4.75%, and here from the income statement you can see that revenue has been increasing year on year, and from a balance sheet perspective you can see assets does exceed liabilities, and from a cash flow perspective you can see operating, although still high, is down from 2022. Next I have 1 share in Deutsche Bank. Past month, you can see they are on quite a decline from a peak in the middle of May. Overall, however, they are up by 1.44%. And in my portfolio overall, they are up by 22.6%, which is not too bad, and that is a gain of £2.42. You can see that their dividend yield is 2.96%, and the financials aren't complete here. You can see balance sheets, things are neck and neck, and from a cash flow perspective, you can see operating income is in the positives in 2023. Now next I have 1.5 shares in Delivery Hero. Over the past month, actually not too bad, up by 5.72%. You can see that in my portfolio overall, they are down by 7.17%. You can see that at some point mid-May, they were above my average buying price, so I was in the green then. However, now I'm down by £2.76, and I'm not crying about that. They don't currently pay a dividend yield, and you can see the net income is down, but revenue is up. Balance sheets look like the number of assets is going down, maybe they're selling them off. And from a cash flow perspective, we can see there's no operating income to be seen, so I don't know what's happening there. Next, I have exactly 1 share in Carnival. Now, over the past month, they again peaked in the middle to end of May, but overall, they are up by 3.9% over the past month. In my portfolio overall, they are up by 54.29%, which is actually really good, and that is a gain of £3.86. £2.80. You can see they pay a decent dividend yield of 3.65%, and you can see revenue is up. Net income is either zero or not here. Balance sheets look neck and neck in 2023 anyway, and from a cash flow perspective, you can see operating income is actually up. Next, I have 21 shares in BP. Now, over the past month, they took a tumble down by 4.17%. You can see that in my portfolio overall, they are down by 7.09%, and that is a loss of £7.85. Now, you can see that British Petroleum currently pays a dividend yield which is pretty good at 4.68%. And here, income statement, you can see revenue is still high, net income is increasing. Here are their balance sheets. You can see number of assets higher than number of liabilities. And from a cash flow perspective, you can see the operating income is down since 2022, but the cost of financing has also decreased. So next I have 0.37 shares in BMW. And as you can see, over the past month, BMW has not been doing too well at all. It is below my average buying price of 99.11. And overall, they are down by 9% this month, which is a bit of a tumble. This might have something to do with US sanctions on imported cars to China. As you may know, China is a huge market for BMW, and so anything that is affected for them in China is going to cause them a lot of trouble. So in my portfolio overall, they are now down by 7.51%, and that is a loss of £2.42. They pay a really good dividend yield of 6.44%, and as you can see from the income statement, revenue is increasing year on year. Balance sheets look fine, and from a cash flow perspective, we can see operating income is down. I accidentally sold my Aston Martin shares when I was making a video explaining how to sell shares. I sold it for around £2, so all my shares were worth £2. Aston Martin was doing terrible anyway, so I don't really care there. But anyway, I have ASML 0.02 shares in them. They are up over the past month by 4.58%, which is really good. In my portfolio overall, they are up by 28.85%. That is a gain of £3.50. And here we can see Paul Briscoe, who is a fan of ASML, saying something they can check out on the app. They pay a very small dividend yield of 0.69%. And as you can see, revenue is up year on year, so is net income, looking pretty good here. From a balance sheet perspective, you can see assets are increasing near exponentially. And from a cash flow perspective, we can see that operating income is actually down. Now, the next few holdings are all in the Magnificent Seven, so let's just blast through them. Apple, 0.42 shares in them. Over the past month, up by 13.69%, overcoming my average buying price of $176. You can see overall in my portfolio now, they are up by 6.76%, and that is a gain of £4.09. Now, they pay a very small dividend yield of 0.53%, and as you can see from the income statement, things look really good, revenue really high, so is net income. In fact, revenue is touching $400 billion a year. Balance sheets, you can see number of assets doesn't look like a whole lot more than their liabilities. However, Apple's fine, they have a lot of cash, and they also service a lot of debt. In terms of cash flow, you can see down is the operating from 2022, but then again, Apple should be quite fine. Next, I have 1.24 shares in Amazon. Now, over the past month, they've taken a massive tumble. It looks massive anyway, but they are only down by 1.52% because they were up at the beginning of May really high. In my portfolio overall, they are still up by a staggering 65%, and that is a gain of £68.22. Now, from an income statement perspective, revenue is incredibly high, higher than $500 billion a year, and you can see net income is up since 2022. Balance sheets also look really good. Number of assets increasing near exponentially, and from a cash flow perspective, we can see operating income is nearly double what it was in 2022. Now, next I have 0.47 shares in Alphabet. Over the past month, up by 5.2%. Now, you can see that in my portfolio overall, they are up by 29.8%, and that is a gain of £14.69. They pay a very small dividend yield of 0.46%, and as you can see from their income statement, revenue is increasing year on year, and net income looks pretty good. You can see revenue is in excess of $300 billion a year. Balance sheets, you can see total number of assets increasing also year on year, and from a cash flow perspective, we can see operating income is also increasing. Now, last but not least in my Trading 212 Invest account is AMD, 0.03 shares in them. Over the past month, they are up by a really good 15.96%. In my portfolio overall, they are up by a massive 111%, so that is a gain of only £2.22 for me. No dividend yield, but we can see revenue is also really high, nothing close to what Amazon and them lot are doing. But balance sheets, you can see total number of assets are way higher than liabilities, and cash flow, you can see operating income has seen better days. Now, let's switch to the Trading 212 ISA so I can show you my holding. Now, you may have noticed that Trading 212 has renamed their stocks and shares ISA to just stocks ISA, because of course they do have a new cash ISA which I've made a video about. But let's go into the stocks ISA now. So you can see my current portfolio balance is £43,454, and you can see currently I have no free funds and I've maxed out my current tax year ISA allowance. So currently I am down, at least trading 212 calculated, by an unrealized loss of 1.83%, and that is quite dear at a negative £807.99. I have only one holding. This is in the FTSE All World Distributing Fund. So you can see I bought it at an average price of £102.44, and since then it's taken a tumble. However, going forward, I will not regret my decision, because I think I should practice what I preach and just invest in a passive global or broad market index and just show people, over the years, it doesn't really matter where you buy it. Some people thought they bought it right at the top in November 2021 and see what happened later. And again, people thought they bought it at the top February 2020, and then you can see what happened. There's always going to be opportunities for dips. Although this is an ISA and I can't deposit anymore, I can always add money into my invest account and then of course transfer it over, making the most out of any dips that do happen. And I'm just generally happy that I've just bought into this. I did put in, as you can see, £44,262, because of course I did trade over the past years, but I do not want to miss out any more market returns. I've learned my lesson. I will only probably just trade if I want to on my Trading 212 Invest account, because of course I have more time there. One holding, one fund to rule them all. For me personally, it's the VWRL. You can decide for yourself. I've made a video on how to choose your best global index fund, and you can check that out over here. So make sure to check out some of my other videos, and I will see you in the next video.